Our next guest says the surge in mortgage rates that we've seen lately is the equivalent of a 6% increase in a home's price from a monthly payment perspective. Let's bring in Alan Ratner with Zelman Associates. It's a Walker and Dunlop company. Alan, welcome. So, I mean, this has an impact.
Yeah. Hey, Kelly, thanks for having me. No question it has an impact. You know, there's a lot of noise in the housing market right now. Diana mentioned the election, higher rates, et cetera. But at the end of the day, you know, this is a market where affordability remains incredibly stretched. There was a lot of optimism this time a month ago that rates would be, you know, continuing on a downward trajectory, maybe even dip into the fives. And of course, we've seen a reversal there. So it's important to keep in mind what impact that does have on the consumer. And every 25 basis point increase in mortgage rates is the equivalent of a 3% increase in home prices from a monthly payment standpoint. So this is really pinching the consumer's wallet.
Yeah. What does it mean for the housing market overall?
Well, I think from the housing market perspective, we continue to see a slow grind higher over the next several years. You know, rates obviously off of the bottom here, but still down year over year. We're still seeing a solid economy. And I think from a very high level, more inventory, as long as it's not distressed, is a good thing to kind of get the wheels back moving again in the housing market, because the resale market has really been constrained by a lack of inventory. The new home market, on the other hand, you know, we're continuing to see solid activity there. The builders have a real competitive advantage. They're able to buy down mortgage rates so they can solve at least a portion of that affordability issue for the buyer. And they've taken a good amount of share from the tight resale market.
And in that case, where does that leave the home builders?
Well, I think right now, from a home building perspective, we continue to see mid-single digit volume growth, where the stocks have been under some pressure recently, down about 10% from the highs. I think is more around concerns about gross margin and what impact those mortgage rate buydowns are going to have on margin. So there's demand for homes and they're selling homes. The question is at what price and margin. And right now, just given where affordability is, we just don't see a lot of opportunity to raise prices or lower incentives to drive that margin back up.
Although that's what we're hearing from some of the builders that they're doing.
Yeah. So I think a month or two ago, there was a lot of optimism in the industry that this time, you know, I'm sitting here mid-October post the Fed rate cut, that they would be able to dial back those incentives. They would be able to stabilize margin. And that really hasn't happened. We've heard from a number of companies over the last several weeks, and now earnings season's kicking into high gear, that incentives remain very competitive. Rate buydowns remain very prevalent in the market, and that's putting a bit of a downward pressure on gross margin.
All right. Alan, thanks so much for joining us. So we appreciate checking in with you today.